Hello and welcome to this video. In this video, we are going to do a A-level question from paper 3, Specimen paper 2023, question 1. The following information is provided in the first question. The finance director of Y Limited had provided the following statement of financial position for the year ended 31st December 2020 drafted and 2019. Here all the values are in thousands. First we have assets. In assets we have non-current assets. In this we have premises, which is $248,000 and $111,000. Plant and machinery, which is $34,000 and $52,000, and the total is $282,000 and $163,000. Then we have the current assets, in which we have inventory of $48,000 and $36,000. Then we have trade receivables of $46,000 and $49,000. Then we have cash and cash equivalent of $40,000 and $14,000. When we total the current assets, it is $134,000 and $99,000. Then the total assets, that is the total of current as well as non-current assets, we get $416,000 in 2020 and $262,000 in 2019. Furthermore, we have equity and liabilities. In equity, we have ordinary share capital, and the share face value is $1 each, and the value for 2020 was $150,000 and for 2019 was $100,000. Share premium $20,000, revaluation reserves $100,000, retained earnings was $18,000 and $57,000, and the total of all the equity was $288,000 and $157,000. Non-current liabilities, in which we have bank loan, which is $95,000 and $70,000. Current liabilities, in which we have trade payables, and the value was $33,000 and $25,000. Taxation is $10,000. The total of current liability was $33,000 and $35,000. The total of liability, that is current as well as non-current together, was $128,000 and $105,000. Then the total of equity and liabilities together was $416,000 and $262,000 in 2019. Additional information which was provided was the loss from operation for the year was $14,000. Depreciation charge was, for premises it was $2,000. For plant and machinery it was $11,000. Plant and equipment that had a cost of $12,000 was sold for $6,000 during the year. Accumulated depreciation at the date of disposal was $5,000. The premises was revalued upward by $100,000 on 1st April. Bank interest charge in the statement of profit and loss and paid during the year was $4,000. A final dividend of 12 cents per ordinary share was paid on 31st March to the shareholders on the register at 31st December 2019. On 1st September, the company made a right issue of 1 ordinary share for every 2 ordinary share held at the premium of 40 cents, and the right issue was fully subscribed. An interim dividend of 6 cents per ordinary share was paid on 30th November to the shareholders on the register at 31st October. There was no provision for taxation for the year ended 31st December 2020. And in the event of the question, we are asked to make the cash flow statement for Y Limited, and it will be for the year ended 31st December 2020, and it should be with accordance with IAS 7. So for this, the first two information which is given, that is the loss of operation for the year was $14,000, will be taken as it is, and then the depreciation charge which was also given for premises, which was already calculated for $2,000, and for plant and machinery $11,000 will be taken. For furthermore, we will start with the working notes, and then we will proceed and make the cash flow statement. In the third bit, it is stated that the plant and equipment that had a cost of $12,000 was sold for $6,000. The accumulated depreciation at the date of disposal was $5,000. So the cost of plant and equipment which was sold was $12,000, and the accumulated depreciation, if we subtract this $5,000, the net book value of the plant and equipment which was sold was $7,000. However, Y Limited was able to sell it only for $6,000. That means there was a loss on the sales of plant and equipment of $1,000. In the fourth bit, it is stated that the premises was revalued upward by $100,000 on 1st April. So the value of premises which was given on 31st December 2019 was $111,000. If we revalue this upward, that means we have to add $100,000 to this. And the depreciation which was mentioned in the second bit of additional information was $2,000 for premises. So when we add and subtract, we get the value of premises as $209,000. However, it was mentioned in the drafted financial statement on 31st December 2020 as $248,000. So based on this, there was additional purchases of premises. To calculate this, we take the value which was given in the drafted financial statement as $248,000. From there, we subtract this $2,900 which we got, and we will get the additional purchases of premises which will be for $39,000 for the given period. Then fifth bit, it is mentioned about the bank interest, and we can take it directly. Then in the sixth bit, it is stated that a final dividend of 12 cents per ordinary share was paid on 31st March to the shareholders on the register at 31st December 2019. So the ordinary share capital which was mentioned for 2019 31st December was $100,000, and the face value which was given was $1 per share. So when we take this $100,000 divided by 1, we get the number of ordinary shares which is $100,000. And to this, if we calculate the dividend by multiplying 12 cents, we get the dividend paid as $12,000. In the seventh bit, it is stated that on 1st September, the company made a right issue of 1 new ordinary share for every 2 ordinary share held at a premium of 40 cents. The right issue was fully subscribed. So this means if an ordinary shareholder have 2 ordinary shares, he will receive 1 ordinary share as a right issue. So we have 100,000 ordinary shares. So the right issue will be, we cross multiply this, that is 100,000 times 1 divided by 2, 50,000 new right issue of ordinary shares were made. And the face value of ordinary share was $1. So 50,000 times 1, we get $50,000 as additional ordinary share capital which they have received from the right issue. Apart from that, it is mentioned there is a premium of 40 cents. So $50,000 times 40 cents, we get $20,000 as the share premium which was received from the right issue. So the total proceedings which they received from the right issue of ordinary shares will be $50,000 plus $20,000, that will be $70,000. Then in the 8th bit, it is mentioned that an interim dividend of 6 cents per ordinary share was paid on 30th November to the shareholders on the register at 31st October. So here the right issue was on 1st September, so these shares should also be included. So 100,000 plus 50,000, which will be 150,000 ordinary shares, times the 6 cents which is the dividend which is paid, we get the value as $9,000. In the 6th bit, we have calculated the dividend which was paid in the month of March, and we got 12,000 there. So 12,000 plus 9,000, which is equal to 21,000, will be the total dividend paid during this period. And then there was no provision for taxation for the year ended 31st December 2020. So the provision for taxation in the beginning was $10,000, and there was no provision at the end. So the total tax which was paid was $10,000 during this period. As we are done with all the calculation, let's now proceed and make the cash flow statement based on IAS 7. We will start with the operating activities. In operating activities, we will start with profit or loss from operation. Here we have loss from operation, which is mentioned in additional information 1 as $14,000. Then we will proceed and check all those expenses which do not lead to inflow or outflow of cash. First, we have depreciation. Depreciation do not lead to any inflow or outflow of cash. It shows the usage of non-current assets for the purpose of production, and as we have used this non-current assets for the purpose of production, there will be a reduction in the value of the asset, and hence it is regarded as an expense and subtracted when we calculate the operating profit. However, as it do not lead to any inflow or outflow of cash and we are checking the cash balance here, we are going to add this back. So depreciation is mentioned in the additional information too. Premises have a depreciation of $2,000 which will be added back, and then we have plant and machinery which have a depreciation of $11,000 which will be added back. Next we have loss on sales of plant and machinery. Again this shows that there was under depreciation of plant and machinery which led to a loss, but as this is not an outflow of cash, we are going to add this back. We have calculated this in the third working notes as $1,000 and we are going to add that back. Next we have increase in inventory. In 2019 it was $36,000 and in 2020 it was $48,000, which means there was an outflow of cash due to the purchase of inventory. Hence we have to subtract this $12,000. Next we have decrease in trade receivable. In 2019 it was $49,000 and in 2020 it was $46,000. That is, there was an decrease of $3,000. This means that the customer who were due to pay and who have not paid us and who have taken the goods on credit have now paid the money, and because of this there was an inflow of cash, and as there was an inflow of cash we are going to add this $3,000. Then we have increase in trade payable, which means Y Limited was able to buy more goods on credit and was able to sell them, and as they are buying it on credit there was no outflow of cash, but as they were able to sell more goods, hence there was inflow of cash. Hence in 2019 it was $25,000 and in 2020 it was $33,000, which led to an inflow of $8,000 in the business. So based on this, when we add and subtract, we get the cash used in operation as negative $1,000, and from here we subtract the interest paid, which was mentioned in the additional information 5 as $4,000, as well as the taxation paid, which was in the working notes 9 and it was $10,000. So when we subtract this minus 1,000, minus 4,000 and minus 10,000, we get the net cash used in operating activities as minus $15,000. This was an outflow of money for operating activities. Next in the cash flow statement, we will mention the investing activities, where we have the money which we received from the sales of plant and machinery, which was mentioned in the additional note. As it was a cash inflow, we are going to add 6,000 here. Then we have also calculated the purchases of premises in our fourth working notes, and as we have purchased the premises there will be an outflow of cash, and that was $39,000. Then we are going to add and subtract and we get the net cash used in investing activities as negative $33,000. Then in the last part of the cash flow statement we will go for the financing activities. In this we have proceeds of issue of ordinary share, which was calculated in the seventh working notes, where we have calculated the right issue of shares plus the share premium, and we got the value as $70,000, and this is the inflow of cash, hence we are going to add it. Then we have proceeds of long-term loans. That means additional long-term loans was taken, because in 2019 the long-term loan was $70,000, in 2020 it was $95,000. That means $25,000 was the additional long-term loans which was taken, and as this leads to inflow of cash, we are going to add this back. Furthermore, we have ordinary dividend paid, which we calculated in the eighth working notes, and as this leads to an outflow of cash, hence we are going to subtract $21,000. Then we get the net cash from financing activities as $74,000. Then what we are going to do is we are going to subtract the net cash used in operating activities, which was minus 15,000. Then net cash used in investing activities, which was minus 33,000, and once we add and subtract, we get the net increase in cash and cash equivalents as $26,000. Then to this we will add the cash and cash equivalents, which was at 1st January 2020, that is $14,000. Then we will get the cash and cash equivalent at 31st December 2020, which was $40,000. With this we have completed the cash flow statement. In the B bit of the question, we are asked to state 3 circumstances under which the auditor will issue an unqualified audit report, An unqualified audit report is a clean report, and this is given by the auditor when the auditor is satisfied that the financial statement provided by the business represent a true and fair view. So, the three circumstances under which an unqualified audit report will be issued are when the auditors are in the opinion that the company's financial statements are fairly and appropriately provided and represent true and fair view of the status of the company. Furthermore, they should be in compliance with the GAAP as well as the laws and company rules regulations which is stated by the government. Furthermore, the auditor should also believe that all the changes of accounting policies and their applications are effective and are accurately disclosed. Furthermore, additional information is provided. Y Limited had received a letter in August 2020 from a customer P Limited stating that they are taking legal action against Y Limited for a breach of contract. Y Limited's lawyer has indicated there is 80% probability that Y Limited will lose the case and the estimated amount to settle the case will be $36,000. This matter had not yet been taken into account in the drafted financial statement for the year ended 31st December 2020. In the C bit of the question, we are asked to discuss how the matter should be treated in the financial statement for the year ended 31st December 2020. We have to justify our answer making reference to appropriate IAS standards, that is International Accounting Standard. The treatment of this matter in the financial statement falls under IAS 37. This IAS 37 deals with provision, contingent liabilities and contingent assets. And this states that a provision have to be made under following circumstances: when a present obligation exists as a result of past event, then the payment is probable, that is it should be more than 50% likelihood that the event will occur, and the amount is estimated reliably. If we see this matter here, this have occurred because of a past event, that is there was a breach of contract between Y Limited and P Limited, and this was because P Limited was a customer of Y Limited and they were not able to fulfill the contract of P Limited. So because of this, Y Limited is facing a legal action. So this is based on the past event. Then let's see about the probability. There is 80% probability, so it is more than 50% probability that Y Limited will lose the case. Furthermore, there is a reliable estimation, that is $36,000 have to be paid for this breach of contract. So based on this, under provision IAS 37, this have to be taken into consideration, and the sum of $36,000 need to be paid in future. So for this, Y Limited should make a provision of $36,000 as an expense in the statement of profit and loss account and show the same amount as a current liability in the statement of financial position. Furthermore, additional information is provided. Sarah is an accountant of Y Limited. She reports to the finance director. Her assistant accountant, who was responsible for drafting month-end financial statements and reports, has resigned from the company. Sarah's daughter Gina has recently lost her job. Sarah suggests to the finance director that Gina should be recruited as her new assistant accountant. Gina studied A-level accounting 10 years ago and has since worked as an accounting clerk. She had no other accounting qualifications. The finance director has rejected Sarah's proposal. In the debate of the question, we are asked to explain why the finance director rejected Sarah's proposal to recruit Gina. We have to justify our answer with reference to fundamental principle of ethical framework for accounting. The finance director may have rejected Sarah's proposal to recruit Gina based on the following reasons. The job of an accountant required appropriate professional competence, and Gina has just done her A-level accounting, which may be under qualification, or she may be not qualified enough to fulfill the job of an assistant accountant. Furthermore, employing Sarah's daughter as her assistant may lead to unprofessional job ethics, as this may lead to professional conflicts of interest, and this may lead to biased professional evaluation, and This may be the reasons why the finance director may have rejected Sarah's proposal. With this, we have completed this question. Thanks for watching my videos. Have a peaceful and blessed life.